بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد الصادق الأمين وقل رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي اللهم انفعنا بما علمتنا وعلمنا ما تنفعنا يا أكرم الأكرمين. Shall we start our class as usual with Surah Al-Fatiha? بسم الله الرحمن الرحيم. Okay, today we will cover the chapter 10 about the audit of internal control and control risk. So this topic is quite important because we will cover something that it is part of the assessment that will influence the volume and the effort that the auditor will do in terms of and it will affect the auditor's decision in the end of the completion of the auditing. Okay, so we need first to understand what is the control. So I give you this diagram. So the controls is kind of balancing in achieving doing the performance, ensuring doing the performance to achieve the objectives with lower risk. So the controls will try to control the risk, minimize the risk, and ensuring that the performance is efficient to achieve the company objectives. So the controls is kind of balancing between the three element of the company. Okay, so internal control is consist of policies and procedures designed to provide management with reasonable assurance that the company achieve its objectives. So if you notice here, we are talking about policies, procedures that the management should undertake and have it in place to achieve the company objectives. Okay. So the learning objective number one is to describe the three three objectives of the effective internal control. So number one is the reliability of financial statement. So it means that the internal control, the effectiveness of internal control aims to produce or to enhance the reliability of financial statement. Okay, then next objective is about the effective and efficiency of the operation, ensuring that the operation or the performance of the employees of the machines all are accurate and operate in the correct manner, which will enhance the achieving the objectives. Thirdly is the compliance with the law and regulation. So the internal controls requires to issue report about the effectiveness of internal control. So if there is any law and regulation, either by government or by stock market or even by the board of directors, the internal control will play a role to ensure that this rules or this law has been complied by the staff and so on. Okay, so here we need to discuss the responsibility. The internal control is having the responsibility related to the auditor and also the management. So we will discuss in details because we are now standing in the shoes of the auditor. As an auditor, we have responsibility toward the internal control, and also we need to understand and differentiate between the management responsibility and the auditor responsibility with regard the internal control. So management responsibility is to establish and maintain company internal control. They also need to minimize and minimize the inherent risk, and they need to provide with reasonable assurance with regard the internal control, and then design the internal control. So the second one is about assessing the inherent risk. Second one, provide the control activities, and then design it into internal control and maintain. So this is the management responsibility. Lastly is to operate the internal control effectively. Yeah, we may have the internal control in paper, but we also need to ensure that it take place in the operation, in real business. So the management has the responsibility to design the internal control based on the inherent assessment of risk, and based on reasonable assurance that the capability of the company and the capacity of the company, if maybe be due to the size or the type of industry, and then they need to have it in place. And when they have it in place, then they need to maintain the internal control procedures, ensuring the effectiveness of it. So this one is based on Sarbanes-Oxley Act in 2002, Section 404, uh, requires the management to state whether or not the company's internal control procedures are adequate and effective. And this one is related to the public company, the listed companies. Okay. So now we finish with the management responsibilities. Let's move to the auditor responsibility. Auditor responsibility is to understand the internal control. First, to understand the internal control, and uh, also to test the internal control. So understanding and testing the effectiveness of internal control, and this one should cover the internal control over the reliability of financial statement and the control over the class of transaction. Remember, we have discussed the management assertions in the previous chapters, and we discussed that there is management assertions related to the classes of transaction, and management assertions related to the financial statement, which is the balance of details. Okay, so we will have some insight here. So control over class of transaction is emphasis on transaction related to control compared to account balances. Accuracy of system output depends heavily on the accuracy of input and process. So the controls over class of transaction, it will focus in the input process, accuracy of the input and the process, whereby the control over the reliability of financial statement or financial reporting is about controls that affect the internal management information, the important source of evidence to decide whether the financial statement are fairly presented. So in the right side, we can conclude that control over classes of transaction are focusing in the process and the input. So input, when we see input, means the supporting document of transactions, and process, how we process this transaction in terms of recording in journal and posting to the ledger and preparing the trial balance and so on. But for the control over the reliability of financial statement, it is about the output. So it is about the how they classify the figures in the financial statement, accuracy of that figures, and so on. And if you notice, the class of transactions is also affecting the the financial statement reliability. We need also to discuss the test of operating effectiveness. We need to test whether the control is operating as designed. So we will test the operation and we benchmark it with the design. Um, so next is whether the person perform the internal control has the authority or qualifications to perform the control effectiveness. Oh, okay. So we move to learning objective number 3, explaining the 5 component of Casco framework of internal control. So we have the this diagram is explaining the component of internal control. So starting from bottom line, which is the control environment, risk assessment, control activities, information and communication. Lastly is monitor monitoring. Okay, and this one is explaining the same things but putting the uh, put it in a diagram, then put the information and communication out of the hierarchy or the pyramid. Okay, so let's start with the first component of the internal control, which is related to the control environment. So the actions, the policies, and procedures that reflect the overall attitude to of the top management and owners of entity about the internal control. Okay, so the management and there is some point or criteria that should be established on the company to ensure that they have sound of control environment. Number one, integrity and ethical values. So the management, the top management, and also the organization as whole should establish integrity and ethical values, how they communicate and reinforce in practice. So the management should practice the integrity and ethical values and being a good example, role example for the staff. So if there is, let's say, example of there is a control of coming early at 8 o'clock morning to the staff, to the office. So the management should play a role in showing good example coming early. But if they didn't, then the staff will not adhere and comply with this rule and control, which will be create an healthy internal control environment. Next is human resource policies and practice. Depends in how trust and competent is the personnel. So we need to the company should establish human resource policies and practice that help to control the performance of the staff in terms of the compensation, in terms of the attendance. Now we can see here one of the examples that we are playing here in our class is to have the sorry to have the attendance beginning and end of the class, just to ensure the attendance of the class of the student. And another lecturers, what they do, they will ask the student to open the camera, so that will to ensure that the student are giving attention. But for me, I don't feel that's appropriate. So each one can we should create sort of trust between lecturer and student. Okay, so number 3 is uh, commitment to competence, knowing the competence level for a specific job. So we need to know what is the specification and requirement for each job, and we ensure that this staff is having or the staff hired in this position have the qualifications to fulfill that job. Also, the board of directors and audit committee participation is vital and very crucial to ensure that the implementation of proper internal control and financial reporting process. So they will play a role in terms of oversighting and monitoring the process of operating internal control and preparing financial statement. Okay, so next is the management philosophy and operating style. So as I said, if the manager's style or the management philosophy believing on internal control, they believe in that internal control is very important and plays significant role in achieving the three objectives that we mentioned just now. The first objective is the enhancing the reliability of the financial statement. Second is enhancing the effectiveness and efficiency of the operation, and third one is enhancing and ensuring the compliance of the rule and regulation. So if the management have that in mind, so they will invest more in the internal control. So the management philosophy and operational style provides clear signal to the employee about the importance of internal control. And this one we can refer to the example that I gave just now about the, coming or bunching in early morning by the manager. Lastly, it's about having organizational structure, understand the management and the functional element of business. So having those 6 items will create a healthy control environment. Okay, so now we move to the second component, which is risk assessment. The management, identification, and analysis of the risk relevant to the preparation of financial statements. So the management need to identify and analyze the risk related to the financial statement, and then they need to after they need to identify how to estimate, sorry, they need to estimate how significance uh, they need to identify the significance of this risk and access of the specific actions to reduce and mitigate this risk. So they need to identify and analyze the possible risk related to the preparation process of financial statement. Next, they need to estimate the significance. Sometimes the this estimation will be in term of ringgit, okay, or dollar, to, and then they need to propose what is the action should be taken to minimize this kind of risk. Okay, if the management effectively assess and respond to the risk, the auditor will accumulate less evidence. So here, this statement show us how the risk assessment may affect the auditor's process and auditor's work. So now, if you notice, we this one also will affect if the auditor will accumulate less evidence, means the the audit fees will be less. Okay, so now we move to the third COSCO component of internal control, which is related to control activities. Number one is adequate separation of duties and we will explain it in short while, each one in separate. So number two is physical control over assets and records, proper authorization of transaction and activities, independent checks on performance, adequate documents and reports. And let's see one by one. So adequate separation of duties. So we have, let's say, we take the example of transaction, one transaction, let's say a selling transaction. So we have the custody, or the custody staff, or the staff who are safeguard the custody, either the cash or the inventory. So this this duties, or this duty should be separate from the one who performed the transaction, which is the cashier, and also the staff, the inventory staff. Then we have the one who record and or keeping the record. So this one should be separate. And then we have the authorization, the one who authorized this transaction, especially in term of paying cash, or doing payment to outside. So should have carry authorization, or the credit limit authorization, and so on, if we sell on credit. And then lastly, about the reconciliation, should be segregated from the other duties. So normally we will have this reconciliation in the internal audit function, if we are public company. Okay, so segregation of duties, it's kind of separating the duties, and avoiding having the same person to do multitask uh, related to the transaction, which may, if we have less separation, it will create it create risk of fraud or errors. Okay, so this one, just to simplify the diagram just now. So custody of assets should be separated from the holding the account. Authorization of transaction should be separated from the custody related assets. Operating Operational responsibility should be separated from the record keeping responsibilities, and IT duties should be separated from the one who are using the IT system. Okay, so now we move to the authorization, proper authorization of transaction and activities. We have two types of authorization. One is general authorization and specific authorization. For the general authorization, that the management will establish policies and subordinate implemented by approving all transaction within the limit set by policy. Um, I will give you an example. Let's say we have manager. We have the manager. We have the financial manager. We have the staff, or we can call the desk, the desk staff, those who are helping directly to with the customer. So the general policy or authorization, that the staff in the front desk, they have the right to sell on cash only. But any transaction with the credit, it should be authorized by the subordinate of, or the level of the financial manager, the CFO, financial controller. Okay, but within the limit of, let's say, 10,000 ringgit. But more than 10,000 to 10,000 ringgit is not within the authorization of the CFO. So they need to have special authorization, specific authorization, which will be for certain transaction. Management prefer to authorize each transaction one by one. I hope that example is help. Okay, so next activity is about independent checks on performance. So careful continuous review of the uh, four activities means we are reviewing the other component of the internal control, the other four components of internal control. Other than that, internal verification can be automated as part of the system. Okay, so uh, next internal control activities is about physical control over the assets and records, and mainly this one is related to the physical assets, which is either the inventory or the PPA or the cash on hand. So to prevent loss that can disturb the account process and business operation, and it is kind of safeguarding the assets. The assets is the use of physical protection, as like CCTV, or we have security on 24-hour security, and so on. Then lastly, the last activity of internal control is about adequate documents and reports. Transactions are entered and summarized, and then essential for correct recording of transaction and control of assets. We need to this is sort of some sub activities. When we have the documentations, we need to have pre-numbered uh, consecutively, and it should be the documents, especially the invoice or the receipt, should be pre-numbered, uh, should be prepared at the time of transaction, should be designed for multiple use, means we have a few copies, or if we are using software accounting, should be sent some copies to other departments. And lastly, constructed to encourage the correct preparation. Okay. The last one, before the last one, the last component of COSO framework of internal control is the information and communication. The purpose of the accounting information is to uh, initial, record, process, and report the entity's transaction, and to maintain accountability for the related parties. This is one part of this. So we need to ensure that the accounting information has been uh, prepared, and ensure that it is well recorded. So let's say we are talking about the inventory. So information about the inventory should be maintained and recorded in a right manner and provided. So what information should be included? So we need to ensure that the major classes of transaction of the entity. Next is how this transaction are initiated and recorded. Three is what the accounting record exists and their nature. Four is how the system capture other events that significant to the financial statement. Lastly, the nature and the details of the financial reporting process. And if you see here, this uh, five items or 5 points that the auditor should look into when they are looking to the internal control, in terms of major classes of transaction, in terms of how they record these transactions, and also what account record exists and their nature. So did they record it and classify it in the right place, and how the system capture other events that's significant to the financial statement, which is not included in the major classes of the entity of transaction. Sorry. Okay, so now we move to the last component of COSO framework, which is monitoring. First deals with ongoing or periodical assessment of the quality of internal control by management. Next, internal audit functions must be performed by staff independently. They are independent of both operating and accounting department. Most probably they will be the internal audit department or the internal audit function if they have it. But for small and medium companies, we will not have sort of internal audit functions, but then maybe a person will handle that according to the size of the company. Okay, and lastly is adequate internal audit staff can reduce external audit cost by providing direct assistance to the external auditor. And this one is another issue we may address it later on, discussing the reliance of the external auditor on the work of internal audit function or internal audit staff work. So usually if the auditor or the external auditor will assess the internal audit function if in terms of how independent they are, and also how effective they are, and how much the budget for them, how many staff working in the company as an internal audit. So the auditor will assess all of that and decide whether how much he's supposed to rely on the internal audit output. Okay, so this is a kind of summary of 17 principles of internal control based on COSO. So for control environment, we have 5 principles. The first one is demonstrates the commitment to integrity and ethical values. Number 2, exercise oversight responsibility. 3, establish structure, authority, and responsibility. 4 is demonstrates the commitment to competence, and then earning personal accountability. Sorry. Okay. And then we have the risk assessment. We have 4 principles related to the risk assessment. One is specifies the suitable objectives, identify and analyze the risk, then assess the fraud risk. Number 9 or number 4 under risk assessment is identifies and analyze the significant change, which is about the cost of that risk. Okay, then under control activities, we have 3: select and develop control activities. Number 2, select and develop general control over technology. Number 3 is deploys through the policies and procedures. And then another 3 under information and communication, uses of relevance information, communicates the entirely, means we communicate those information to the related parties within the organization or the company. Okay, number 3 is communicate the external. So some we communicate internally, some we communicate externally. Okay, now lastly is the monitoring activities. Conduct ongoing and periodical or separate evaluation and evaluate and communicate the deficiencies if there is. Okay, so by now we can say that we finished the internal control activities. So this video I will play now, it's, I believe it will help in explaining more. Okay, so by now we finished the learning objective number 3 about the COSO. So we have 5 components under the COSO framework. Number 1 is environment, control environment, establishing control environment. Then number 2 is about the assessing the risk. Number 3 is the assessing is the control activities itself. And then number 4 is the information and communication. Number 5 is the monitoring. Okay, so what I would like you to take note here, that the management should establish those five components in the company. Okay, so they should have established a control environment. They should have assessed the control risk in their company. They should, in response to their assessment of control risk, they should establish or create, develop the and design the control activities, either the authorization system, either the segregation of duties, either the documentations, either the independent verification. Okay, so they need to establish or design the internal control system based on the assessment of risk. And then they need to have information and communication. And when we say information and communication, means they communicate all of this internal control upside down, from the staff to the management, from the management to the staff. Okay, that's why we have the, when we illustrate, in the early slide, we illustrate the paradigm slide, the paradigm diagram with the two arrow of the information and communication. Lastly is the monitoring. Monitoring, when we say monitoring, we need to monitor the four component of internal control. The management should establish sort of system or sort of function that monitor this those four items or four component of internal control. Okay, so that is what the management should do. It is management responsibility to establish and conduct and having the five component. Now, for the auditor, remember when we talk about auditor responsibility, now we will, from now on, for today's topic, we will discuss the auditor responsibility. Auditor responsibility is to understand those four components, are taking place. So the auditor should obtain understanding, and also the next is to test that internal control system. So now we learning objective number 4 is about obtaining and document and understanding of internal control. Okay, so we have four process or four phases that the auditor should go through to for understanding the internal control and assessing the control risk. Okay, so number 1 is obtaining and documenting the understanding of internal control, design, and operation. We need to differentiate between what is the designing internal control, which normally it is like tax or a booklet of internal control written in either in narrative or in flowchart. We will discuss it in a short while, and discuss, and then also we differentiate the operation, whether this internal control system designed are operated, are taking place in the operation. Okay, so next one is assess control risk. The phase 2 is to assess the control risk. Number 3 is to test, design, perform, and evaluate the test of controls. Okay, lastly is decide the plan, deduction risk, and substantive test. And this one will be the last point that we will discuss. So we will go one by one. So let's start with obtaining and document understanding of internal control, design, and operation. Okay, according to SAS 109 and BCOB Standard 2, require auditors to obtain an understanding of internal control for every audit. And this understanding should contain the design of internal control, whether this design taking place in operation, and also uses this information as a basis for the integrated audit. When we say integrated audit, means the uh, the test, substantive test later on, either substantive test of transaction or substantive test of the details and balance, which will form and shape the auditor opinion. Okay, so the type of method to test: first, the design. So we have narrative, we have flowchart, we have control, internal control questionnaire. Number one, and in some textbook they will have four methods where they include the checklist. Okay, so narrative is a kind of written description of the client internal control, detailing the existing practice, can be lengthy and difficult to review. Okay, a proper narrative describe four things. One is the number one is the origin of every documents and record in the system. Number two, all processing that take place. Number three, the disposition of every document and record in the system. Number four, the indication of the control relevance to the assessment of control risk. Means the auditor will write down something about uh, the internal control, which is quite it may take time, and also it will be too long and difficult to review in later time. And this one normally they use it, those who have classical mind of like to write more compared to the visual people. Visual people will uh, uh, kind of people will try to use the this one, use the flow chart. Okay, this is about one example of Deloitte. They audited one company, so they describe the internal control in paragraphs, okay, in narrative manner. Okay, so this is so the flow chart is diagrammatic representation of which showing this the client documents and their sequential flow in the organization. Next, it provides a short view of the client system in visual form. It is easy to read and easier to update. Okay, this is an example of credit approval workflow or short flow. So we can see that they start from the form, and then they have sales call. This one will be goes to the order entry, and we have here one stuff. It shows that there is one stuff to key in the order, and they will update the credit file, and then the credit check will be handled by one staff or by the system if it is through the software, and they will refer to the credit report, and so on. Okay, so if they give the approval, then they can proceed with the credit with the transaction. Okay, so this visual flowchart it's same to what is the narrative, but it is easy to understand, easy to update. But for the narrative, you need to write down everything about the sequence, about the document that they have, and so on. Number three is about the using the method of internal control questionnaire. So in this case, the auditor will prepare questionnaire to and distribute it to the staff, asking series of questions about the control. Most questionnaires will require yes or no response. Auditors cover each audit area reasonably and quickly, best used together with the flowchart to well understand the client internal control. So this is also another method to collect the information about the internal control, just to gain understanding and obtaining understanding of internal control. So this is an example of one of the uh, uh, questionnaire about the deposit to the company treasury and also cash funds. Okay, so we need to evaluate the internal control operation. Okay, so by update and evaluate the auditor's previous experience with the entity. So let's say the company that we are auditing its previous or existing client. So we have the experience for last year's auditing. So what we will do, we need to review and update the previous experience about the internal control operation. Okay. Next is making an inquiry of the client personnel. So we make calls, we go and visit, we have a short discussion or long discussion with the management or staff employee to gain more information. And then next is examining the documents and records to ensure that they, let's say they said we have authorization. This transaction is authorization. So what the auditor should look to, sorry, let me, the auditor will check if there is any transaction. Let's say they said we have the credit limit of 5,000. More than 5,000, they need to refer to the top management or to do a CFO. So the auditor may check the documents, examine the documents and records, check if there is any invoice more than 5,000, and he will check who signed that invoice, who approved it. Okay, if the one who approve is the CFO or the financial manager, then okay. If not, then there is a problem with the internal control. Okay, absorbing the activities and operations, and lastly is the perform walkthrough of the accounting system. Walkthrough of the accounting system, it is kind of you create artificial transaction, let's say of 3,000, and you try to key into the system, or to ask them to, if it is manual system, ask them to record one transaction of, let's say, 3,000, and you check, you walk through the system, how they will record, how they will post, how the system will generate report as output in the end of the transaction, and how that will affect the balances later on, related balances. Okay, so by now we finish the obtaining understanding of the internal control. Now we move to learning objective 5 about assessing control risk by linking key controls, significant sufficiencies, and material weaknesses to the transaction related audit objective. Okay, so we are about the assessing control risk. We need to assess whether the financial statement are auditable. And when we say is it auditable or not, means sometimes some companies, they have lousy, very lousy, or very weak internal control, to the point we cannot rely on the financial statement figures that they provide. So if the auditor feel or decide or judge that this financial statement is more than 50% is not accurate, and he cannot rely on the internal control that they have, so he need to assess. The first thing is to assess whether this financial statement are auditable or not. If it is not auditable due to the control risk, high control risk to the point you cannot accept the financial statement, so you may decide not to audit that financial statement. Okay, next, to make preliminary assessment of control risk. So we need to assess control risk by doing the preliminary assessment of control risk, and then we need to use the control risk or the control risk matrix to assess the control risk. Okay, so we will discuss in details the control risk matrix, how we create the control risk matrix. Remember, this learning objective 5 is about connecting the assessment control, the control assessment process with the audit objectives. Okay, so first we need to identify the audit objectives related to the transaction. So let's say we are about the cash or receiving cash. So we need, what is the objectives, the auditor objectives related to the receiving cash is ensuring the accuracy and existing of the cash received, and the accuracy of recording of that transaction. Next, we need to identify existence of control. So we need to check what controls they have in place to ensure that the existence or the cash they receive is secure, and the accuracy of the recording. And we need to also, next is control with related audit objectives. We need to see what controls should be taking place, and then lastly we need to identify and evaluate the control deficiencies. And we also need to identify how significant these deficiencies and how material these weaknesses to the financial statement. Okay, if it is significant and material, then the auditor will consider the high risk. Okay, so we discussed in short while this one. Okay. So this is kind of matrix. The matrix build on two things, build in two components. One is likelihood, the occasion, the occurrence of the redundance of happening of this risk, and next about the impact, how significant is this impact. So if you notice, if it is rarely happen and very low impact, then it is very low. And moving to the right side uh, of this table, you can see it moved to low, moderate, and high, and also critical. When we say critical, means it is very significant, it has significant and material impact, and it is uh, imminent, or it is frequently happened, so it is critical. So this is another diagram to explain and evaluate the significance of control deficiencies. So in the right side, we have the likelihood. In the left side, we have the significant, or the upper side, we have the significant. So if it is remote and immaterial, so the auditor will not give much attention. But if it is material and also probably happened uh, in redundant manner, so we consider material, it is material weaknesses. This is another diagram just to explain the same things. So the main things is to magnitude of potential misstatement and likelihood in the vertical side of the misstatement. Okay, now we move to, sorry, before I move to this, can we refer to textbook uh, figure number 10/4 in page 291, just to show us the relationship between the audit objectives and the control evaluation. This is control risk matrix for Syntalk hardware. Okay, so if you notice here in the upper table, we have the sales transaction related audit objectives, and we have the accuracy, the completeness, the occurrence. We have the classifications, summarization, posting and summarization, and timing. Okay, so let's take one objective. Let's take the accuracy. Okay, the accuracy. So we need to say what is the controls they have. So if you notice the C, okay, the C is in number C2. It is recorded sales are supported by authorized shipping and documents and approved customer orders. So this one will support is related to the objective about accuracy. Okay. And then another control number 4 is also related, which is shipment documents are forwarded to billing daily and billed the subsequent day. Okay, so this one, these two controls are related to the accuracy objective. Another control is about C7. C7 is unit selling price are obtained from price list master file of approved price. Means accuracy of recording price is based on the approved list, not based on the assumption or the mood of the salesman. Another one is C9. Its statement are mailed to customers each month. So they have to ensure the accuracy, they send the statement of credit to the customers monthly. Okay, so those three controls is um, is controlled by the to achieve or to serve this objective of accuracy. Moving to, let's say, take another example of timing, which is the last one. The cells are recorded on the control dates. So it is about timing. So we see what controls they have. We have control 4 is related. Shipping documents are forward to billing daily and are billed to the subsequent day. So this serve this objective. And then we have another control C5. Shipping document are pre-numbered and counted for weekly manner. So this one is two controls. The auditor feel that this is not enough, so that's why you see in the bottom of the table there is D2. There is a lack of control to test for timely record. Okay, so the auditor feel there is a deficiency here, so they put deficiency related to the timing. I hope that it helped. So please refer to the other to the rest of the table and try to read one by one. Okay, so let's move to steps in identifying deficiencies, significant deficiencies, and material weaknesses. First, we need to identify existing controls. Number two, identify the absence of key controls if there is absence. Number three is to consider the possible of compensating control. If some, let's say there is no segregation of duties, but there is the company come out with new control or innovate new control that, let's say, they will have independent verification every day. just to ensure the shortage of segregation of duties. So if they have it, then the auditor number 4, the step number 4 is to decide whether there is a significant deficiencies or material weaknesses. To identify whether it's significant, this weaknesses is material and significant. Number 5, determine the potential misstatement that could be resulted in the financial statement. If you notice, we refer again to the financial statement. So it should be significant. This when we assess the control, we should identify that risk. We identify the existing control, evaluate it, and identify the absence. Then identify if there is an alternative control. And number 4, identify how significant these deficiencies or material weaknesses. And lastly, determine the potential misstatement that could be happen to the financial statement. Then we have 2 steps to communicate those risk assessment. First is communicating to those charged with the governance, and number 2, we prepare management letters. Okay. Number 5, learning objective number 6 is related to describe the process of designing and performing tests of control. So up to this point, we finish the obtaining and documenting understanding of internal control. Now we move to the testing of internal control. What is testing of control? Testing of control is the procedures to test the effectiveness of internal control and support the reduced assessed control risk are called test control. So test of control is the procedures to test the effectiveness of internal control. What is the procedures of for test of control? Number 1, making an inquiry of appropriate client personnel. So we acquire information to the related parties within the client company. Number 2 is examining the documents, records, and report. Number 3 is observing the control related activities. Number 4, reperforming the client procedures. Okay, so those are the 4 procedures that the auditor should require. Number 1, either to call or having interview or having a questionnaire survey to acquire some information from the client. Number 2, examining the documents that they have and records and reports. And number 3, observe the control related activities to observe how they perform the internal control. And then number 4 is reperform client procedures. So having let's say existing transaction, and then we ask them to redo the transaction. We see whether or not it will have the same effect to the financial statement. Okay, the extent of audit procedures, the extent of internal control testing procedures. Should we rely on the evidence from the prior year of audit? So let's say for the existing client, we already done all of this internal control testing for last year. If there is any changes and the auditor is confident enough with the internal control effectiveness, so they will they may rely only on the evidence come from the previous audit report. Or should we conduct testing of control related to significant risk? So let's say they have certain significant risk. It happened that the auditor knows from the previous experience and previous year, so they may conduct only for significant risk. So it will be selectively selecting some controls activities or control system area to conduct another test of control related to that area, or testing less than the entire audit period. So, to try to, if not, then we extend our test, especially if it is new client or a client that have major changes, either merging company or having new branch or having concern of going concern. So they may, the auditor may do more tests of control. So you can see this shows uh, it's increasing the test of control volume or extent of procedures is increasing from left to right. Okay, so here we have the some type of control activities procedures, and we link it to the high level of procedures to obtain an understanding, and in the side is low level of test of control. So in inquiry, usually we do it more extensively in the level of obtaining an understanding of internal control, whereby in the test of control, we do it, but some we do it not that much. We, because we already understand, we didn't rely much in acquiring, because the normally when you ask someone about how good he is or how good she is, they will say they are good and they are excellent, isn't it? So those kind of questions, we expect artificial answers or perfect answer. So we may rely on it in the beginning of the and in obtaining the understanding of internal control, but in the level of testing of control, then it will be only some. Whereby, so we move to documentation. Documentation, yes, we do it with transaction walkthrough. Uh, for the test of control, we use it, but we use it based on sampling. Observation, yes, we have it in obtaining the understanding of internal control. Yes, we use it with the transaction walkthrough. For the test of control, we use it, yes, at multiple times. We use it just in multiple times. Okay, so reperformance, we don't use it in the obtaining and understanding of internal control because it's costly, and we prefer not to start to engage and involve much and be close to the customers. We just observe and checking the documents in acquiring, and reperformance mean we are involving in the transactions, and it shouldn't be in obtaining and assessing the control risk, but it should be in the level of test of control. Yes, we use it based on sampling. Okay, so now we we decide the planned deduction risk and design substantive test. So let's say the auditor used the result of control risk assessment process and test of control to determine the planned deduction risk and related substantive test. Okay, which is we explained it early. Next is the auditor. Uh, the auditor control risk assessment. The auditor control the use the control risk to assess to the balance related audit objectives. So the auditor will use the internal control assessment to link it with the balance related audit objectives. There is a mistake here. The auditor linked the control risk assessment to the balance related audit objectives. So I will adjust it in the file. So later on you refer, instead of C it's link. Okay, so here we compare the obtaining understanding of internal control and test of control uh, system. Number one, in the side of obtaining, procedures to obtain understanding are applied to all controls identified during that phase. Okay, but for test of control, we only applied when the assessed control has not been satisfied by the procedures to obtain understanding of internal control. So let's say we conduct internal control, understanding of internal control, and we are not satisfied with some certain area, and those certain area, specific area, will move to test of control to assess to run some, extend some test of control, but not all. So only certain area here. Next is performed only on one or a few transactions or at single point of in time. We normally in the beginning of the engagement. For the test of control, perform on larger samples of transaction and obtain observation are made at more than one point of time, multiple time. Okay, so just to avoid the artificial, or the staff will try to make it perfect on that time, so we come in multiple times to ensure that the internal control is accurate, is done accurately. Okay, now we have learning objective number 7 is about understanding section 400 or 404 requirement for auditor report on internal control. So what the auditor should report, the auditor should first the auditor opinion on whether the management assessment of the effectiveness of internal control over financial reporting as of the end of the year of physical period is fairly stated in the material respects. So what does it mean? It means that the auditor, special, this one is related to the public companies. The auditor should assess the disclosure of the management assessment on the financial statement about the internal control effectiveness. So normally if you go and download one of the annual report of financial statement of any listed companies in Bursa Malaysia, you will see that there is in one part they will have, the management will state the statement about the effectiveness of internal control over financial reporting. So the auditor will have to state whether it is fairly stated or it is not fair. What they have stated in the financial statement is wrong. So the auditor will also report on that. Next is the auditor opinion on whether the company maintained in all material respects effective internal control over financial reporting as of the specific date. So first is about the disclosure. Next is about the maintaining and operating the internal control effectiveness. How that will affect the auditor opinion? If it is materially affect the financial statement, if it is significant material, then it will change the opinion to adverse opinion, qualified adverse opinion. Disclaimer opinion, it is in the case that the auditor cannot reach to some, cannot conduct some internal control due to the avoidance or the restriction by the client company. Okay. Last learning objectives is related to describing the differences in evaluating evaluating, reporting, and testing internal control for non-public companies. So whatever we mentioned early, it's about public companies, even though we bring the private companies along in our discussion. But here we will have some sort of information. Okay, so in terms of reporting requirement, the private companies are not required to report or state the effectiveness of the financials of the internal control system over the financial reporting statement. The extent of required internal control is actually in the non-public companies or private companies, if it is many small company or small company, they are not required to have sound of internal control, but medium size of companies, they require to have internal control, but not that much compared to the public companies. Reason is because internal control is cost. It creates cost. Yeah, it creates effectiveness of operation and more reliance on financial statement. But we need to consider the cost that occurred due to the internal control, implementing internal control. By logic, if you have if you are trying to have segregation of duties, means you need to hire more staff. But if in private company, let's say a small company like burger or those grocery shop, they have only cashier. So to do segregation, then it create another cost, which may it will create loss of the and reduce the profit margin of that small company. Okay, so the extent of understanding is needed. So the auditor need to understand that, understand the need, how much internal control needed for the size and the level and the type of the non-private, non-public companies. Lastly, assessing the control risk. So the auditor need to evaluate the control risk related to the business of that company and decide and give the professional judgment related to that. Extent of testing of control needed. Okay, so also the auditor should determine the extent of test of control needed for this level. And normally it's company by company. It's based on the company size, type, and also the risk assess, the result of risk assessment. Okay. Lastly, we will here this figure is showing that the internal control over financial reporting in the large oval, and the second one is, or the small one, is internal control used to assess control risk below the maximum, and the upper one is control that must be tested in an audit internal control, and the control that must be tested and an audit when we audit financial statement. So when we audit when the auditor trying to test the internal control, he need to go through a wider range of testing the internal control over financial reporting in general. But when we test the financial, when we audit the financial statement, then we need to test the internal control used as to assess control risk below maximum. Okay, I think with this I finish up this topic. So you can open the mute and raise your question, and also you